So in this session we are looking at August 2020 question 4 adopted. Now it says Mr. Eric Entry retired from the public service of Ghana on 3rd December 2017 and started trading as Eric Entry Enterprise on 1st January 2018. So he is a single parent with 2 children at the University of Ghana. He submitted his income and expenditure statement for the year ended 31st December 2018 to you as the head of the Small Taxpayers Office. So his income and expenses accrue evenly throughout the year 2018, and he presented a withholding tax receipt of 1176. That's a withholding tax credit to you, requesting that the amount should be refunded to him. So he has withholding tax credits and he's saying that it should be refunded, but therefore we have to check and see also if he doesn't have any withholding expenses to withhold, because if you didn't withhold and we see you have withholding expenses, we have to net it off against your withholding tax receipt. So let's see what we have to disallow and what should also be allowed. So first of all, we have his total receipts. Okay, what business was he into? Eric Enterprise. They didn't tell us what he was into, but we have to know. So interest on his personal savings account, because it's an individual, we know this is a non-taxable income. Pension received, also exempt from taxation, non-taxable income. Interest on investments of his pension in treasury bills, non-taxable income. It's not supposed to be there. Then accountancy charges, yes, taxable, subject to withholding tax at 7.5%. Desktop computer is goods, but it shouldn't even be here. It's capital nature. Then we have payee. Payee paid should not also be here. You should take credit for it as an individual. Then social security fund paid, yes, that one is allowed as a deduction. Rent for the shop, yes, it's allowed, but remember you have to take withholding taxes. Then staff salary net, yes, I think that's the payee that is there, is allowed. Stationary goods, withholding tax 3%, but here lies the case, it doesn't meet the threshold. It's only 840, doesn't meet with the withholding tax threshold. Then Toyota pickup purchase for business use 80,000 cedis. You can state your assumption, and when you are computing capital allowance you limit it. So we have vehicle running expenses including fuel 15,000, and we have traveling and transport 36. Okay, so it depends on the assumptions you use, but this question is relatively straightforward for an advanced tax question. Okay, so it says we should determine the tax payable for Mr. Eric Entry and support all our computations with relevant explanations and compute all other taxes that are due and payable by Mr. Entry. We should ignore penalties. This is a relatively straightforward question. So I told you the very first thing we'll have to do here is, for me, so far as I see their capital allowance elements in the question, I would compute my capital allowances first. So I'll say computation of capital allowances. Okay, that's what I would do first. Computation of capital allowances. So per the question, I think within the expenses were desktop computer purchased and Toyota pickup. So I think we have pool 1. You know, pool 1 is 40% for desktop computer, and pickup pool 2, we take it as what, 30%. Then I put here my total allowance. Okay, so in that case, written down value brought forward, we don't know, it was for 2018 year of assessment. So the basis period was from 1st of the 1st 2018 to 31st of the 12th 2018. Okay, so the written down value, there was no written down values as they were purchased in that year, but there were additions, yes. So based on your assumption, you could limit the pickup saying it can't carry half a ton or whatever. But for tutorial purposes, let me just bring the full amounts. So I bring the desktop computer purchased. That was about 5,500. Then the Toyota pickup purchased 80,000. Okay, so straightforward. I think this gives us the depreciation basis for our assets that we acquired, which will still be 55 and then 80,000. Okay, these are the only capital allowance expenditure in the question. So in that case, our capital allowance or depreciation allowance for the whole year, because you operated the whole year, is going to be, I think the first one will be 40% of the 5,500, which is 2,200 as his capital allowance, 2,200. Then we have the 80,000 at also 30%. That's giving us about 24,000. Okay, but somebody can also say the pickup doesn't carry more than half a ton, and therefore he can. Okay, so we know that 24,000 plus 2,200 should give us our capital allowance, which is 26,200 computer. So this is my total capital allowance. For me, there's no need for written down value here because I just need a capital allowance. So here I come and say computation of chargeable income and tax payable for the 2018 year of assessment for Mr. Entry. Then you bring your basis period from 1st January 2018 to 31st December 2018. Relatively straightforward. So I bring my Ghana cedi and my Ghana cedi. Okay, so first of all, let's bring our profit before tax. Profit before tax. So profit before tax, we had net profit of 92,600. 92,600. So now we less all the non-taxable incomes. So any non-taxable income should be taken out. So less non-taxable income. So non-taxable income, I think within the question we're having interest on personal savings accounts. So interest on savings should not be there, remember. So interest on savings account, how much was it? 2,200. 2,200. And we know that pensions received are exempt. Pensions received also exempt from tax. So pension received was 18,000, also exempt from tax. Then interest on treasury bill. Interest on treasury bill is also exempt because it's an individual. So interest on treasury bill is also exempt. It's a government security, 1,002. So all these things were exempt income. They should be added, they should be taken out. So I think we have a sum of 2,200 plus 18,000 plus 1,200, giving us 21,400, taking out 21,400. Okay, so we take out the 21,400 from the 92,600, we end up with 71,200. 71,200. Okay, now that we have the 71,200, the next thing I will want to do is to now add back the disallowable expenses. So now we have the 71,200. So now we add back disallowable expenses, right? Disallowable expenses. So for our disallowable expenses, what was disallowable per the question? I think we have desktop computer purchased. It's a capital allowance expenditure. So desktop computer, how much was it? think it was 5,500 or so. Yes, 5,500. Then we have payee paid. Payee is supposed to get a tax credit. It's a tax. It's not supposed to be taken as a deduction here. So the payee paid would be 1,200 because it's an individual. So 1,002 if it was a company to be allowed, but this is an individual, so we can take a tax credit for it. Then I think we had Toyota pickup, that was the only one. Then Toyota pickup. Okay, Toyota pickup. I think that was the only expense that would be disallowed. I think 80,000 or so. Yes, 80,000. I think that was all. All the rest of the expenses are allowed deductions. Okay, so now we add this back. We have 5,500 plus 1,200 plus 80,000, and that gives us 86,700. 86,700. So 86,700 plus 71,200 plus 71,200. That gives us 157,900. 157,900 as our adjusted profit. Then we now less other allowable deductions. So for other allowable deductions, we have capital allowance as the only other allowable deduction, and I think per the workings we had our capital allowance to be 26,200. We take it out, then that gives us our chargeable income, or you could say he has some reliefs. Did they give us any other reliefs for him? Single parent, 2 children. Okay, so we could deem this to be his chargeable income or his assessable income, because we are going to take some reliefs. So this gives us 157,900 minus 26,200. So that gives us 131,700. 131,700. So as I take my assessable income here, 131,700, what I'll do is that I'll now less my reliefs, and the only reliefs I'll be taking out here will be the responsibility relief. These are 2018. The new reliefs were not changed, so responsibility will still be 200 in place of marriage. Then child education, they are all in recognized institutions in Ghana. It doesn't matter whether it's universities. So 2 by 200, so they have 400 cedis, that's 600 cedis. There was no other deduction in the question, so I think that was also this less 600. So what do we get as a chargeable income? So what do we get as a chargeable income? So we have 131,700 minus 600 cedis, 131,100. 131,100. Okay, so that becomes it. Remember the tax payable at 2018. 2018 the rates changed, so 2018 we need to get the payee rates for 2018, and the 2018 rates, remember, it was from so 2018 graduated rates. We need to get it just as we did for the other employment income question. So first of all, let's get the rate using our payee schedules. So payee, let's get the 2018 annual rate. So 2018, I think we had the first tax table, which was from January to July. That was 6063 as against 38892. 6063. that is from January to July, that is 6063 plus the chargeable income minus 38,892, all at 25%. Then we have August to December rate. So let's check August to December. So August to December, we have 26,340 as against 120 by 35%. 26,340. 26,340 as against the chargeable income minus 120,000, all at, I think it was 35%, right? Yes, 35%. Okay, now that we have this, we can literally get his income. So let's get his January to July income. Whatever we get, we take 5/12 of it. It's 7/12 because it's 7 months. So January to July, I think his income was 131,100. So we have 6063 plus 131,100 minus 38,892, all at 25%. So that should give us his first income. But remember, this is for a whole year, so we take 7 months of it. So that gives us 6063 plus 131,100 minus 38,892, all by 25%. That gives us 29,115. 29,115, but we need 7 months of this. So 29,115 by 7 months. That gives us 16,983.75. 16,983.75. Okay. Now let's do from August to December. We know we still insert the same 131,100 into the formula. So this side was 26,340. So 26,340 plus our chargeable income, which was 131,100 minus this time 120,000, all at 35%. That gives us how much? 26,340 plus 131,100 minus 120,000, all at 35%. So that gives us 30,225. 30,225, but we need only 5 months of this, so we multiply by 5 months. That gives us 12,593.75. 12,593.75. 12,593.75. So his tax on chargeable income, his tax on his chargeable income would be 16,983.75 plus 12,593.75. And that gives us 29,577.5. That's about 29,577.5. But then now we can take some credits that we have. What credits did we have? So now we can't take up the withholding credit, but we can take the payee withheld. So payee withheld, can take a credit for it. And how much was the payee withheld? That was about 1,002. You can take credit for the payee withheld to get his net tax liability. But there are other tax liabilities, like the withholding taxes. So for now, let's not call it net tax liability. because there are other taxes like the withholding taxes too. So what do we get? So minus the 1,002 payee withheld. So 28,377.5. 28,377.5. 377.5. Okay, then withholding taxes. Okay, so withholding taxes, I told you anytime you see it in exam, just bring the item, the amount involved, the rate, and the tax, the withholding tax. Okay, so the first was that I think the accountancy charges. The accountancy charges is a service. The amount was 2,800. Will be subject to tax at 7.5%. It's a service. So we have it has made a threshold above 2,000 times 7.5%. That gives us 210 cedis. Okay, then we have desktop computer purchases goods. So desktop computer, this is goods, and I think that was about 5,500. I've also exceeded the threshold, but goods fetch 3% tax. So 5,500 at 0.03. That gives us 165 Ghana cedis. Then I think we had what else did we have? We had stationery, but the stationery doesn't meet the threshold. Rent for shop. So shop is commercial. How much was the rent? The rent 7,200. But since it's commercial in nature, it's 15%. So 7,200 at 15%. And that gives us 1,080. Then we have the Toyota pickup. So the pickup was 80,000, also goods. So at 3%. At 3%, that gives us 2,400. Okay, so this gives us, I think that was all. So this gives us the total withholding taxes that there are 210 plus 165 plus 1,080 plus 2,400. So that gives us 388, 3855, 3855. Okay, so 3855. So we can get the net withholding tax liability as well. So the net withholding tax liability will be the withholding payable, the withholding tax payable. We had three how much? 3855. Then we less the withholding tax credits that we had. And in the question it says we had withholding tax credit of 1176 Ghana cedis. We take it out, and that is our net withholding tax liability. So that's 3855 minus 1176. So you set them off, and that gives us 2679. 2679. So we can get our total taxes, or our total tax liability, which is the sum of our 28,377.5, 28,377.5 plus our 2679. gives us 31056.5. 31056.5. It's our total tax liability. So very easy question. Just remember how to deal with these questions that are always at advanced taxation level. We'll be always looking out for withholding taxes. Also, capital allowance and other expenses are also key. And your underlying assumptions, remember them. Please don't ever forget every question. You need your underlying assumptions. That is what will score you. Why this was added back, why this was disallowed, all those things need to come.